Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Friday, November 30th. Today I'm back for my weekly check of the broad market indices. We last looked at these charts on Monday, basically came back from the Thanksgiving holiday. I said, I wasn't putting a whole lot of weight on the action of last week just because of light participation, and said we're left with basically a trading range environment. Traced out that pattern and talked about the lows from August as being the downside level to watch, which would be somewhere down right in here on this chart, and the near-term resistance was the area near 1480, which is that support zone. When we turn to the current charts, we see that the SPX did not make it all the way down to the August lows, and instead bounced and puts us right back at that resistance zone here. You look at the comp, we talked about that former support zone there as being potential resistance level to watch. Obviously pushed above there. That brings this level into play. If we look at the Dow, again, trading range. I don't know if we're going to rally back into there, but that's the pattern we're playing out. And you can even see the same thing on the RUT right here. So the obvious question is, what's the takeaway? To sort of get to that, I think we've got to consider the context of what's going on in the market right now. We've obviously got all the turmoil, the subprime, and all that going on, the credit crunch. You've heard that a million times from a million sources. The news this morning, market got a little bit of a bump up on some comments from Bernanke, basically suggesting that the Fed needs to be flexible, which is, of course, is being interpreted as a rate cut is coming, and the market's been looking for that and expecting that. So I think it's important that keep that in mind. The Fed looks like it's going to kind of play ball with the market, so that's an encouraging aspect. When you look at the charts, I want to go back to this trading range we've talked about. You look at the lows right in here, these highs. You obviously get what I'm saying. We're connect the dots here. That puts the area of 1560 or so in play. We have to get through this near-term resistance, but if we're seeing this trading range pattern, that's obviously the upside boundary to keep in mind. So we've got the upside boundary here, we've got the downside boundary here, and we're pretty much stuck right in the middle of that right now. So the coming week, that's basically what we're going to be looking at. Do we push above and move to the top of the range? Do we move back down? It's hard to say. Trading ranges, I tend to focus on the action when we get near the extremes, the middle point. You can fluctuate back and forth with not a whole lot going on. Trading range environments, the thing that I like to focus on is overbought, oversold, particularly individual stocks. So in the coming week, that's what I'll be looking for, situations that are either becoming overbought or oversold, and relying more on that in a trading range environment than I typically do in a trending environment. So, as always, stay tuned to the blog for further updates, and have a great weekend.